But first, let's talk about the latest in cryptocurrencies. Yesterday morning, we learned that Tesla had made a $1.5 billion investment in Bitcoin. And we are seeing really the action just continue when it comes to trading in cryptocurrencies here this morning. We saw Bitcoin rise as high as 48,000 overnight, particularly in Asian trading. And we're continuing to see a lot of enthusiasm, not just for Bitcoin itself, but for cryptocurrencies pretty much across the board, as well as for many of the companies that either have invested in Bitcoin or have some sort of secondary or even tertiary relationship with Bitcoin or blockchain. So it's interesting as we talk about this latest cycle of cryptocurrency, because the last time around when we were talking about this a couple of years ago, the cycle wasn't this long and it didn't seem to go this far, Myles. So it's interesting that this time around, you're also not hearing the same sort of predictions of a crash that you were last time, at least not in the same volume that we were last time around. So I don't know if we can take any big messages away from that, except for the fact that this time around, I think it was our Sam Rowe who tweeted this morning, maybe Bitcoin at this point is too big to fail. There's just too many people invested in it, too many institutions, too much at stake to let a crash happen as happened last time. I don't know. We did have a correction, but it wasn't the same magnitude of a crash.
I mean, I think what's been so different in this latest, Bitcoin surge or coin surge, and this really goes back to September, October of 2020, is that it's not, this tangential, but actually it's about the blockchain. I mean, that was really the defining feature of the mania we saw in 2017 is companies and individuals, everyone wanted to issue a token, do an ICO, pivot their business to being a blockchain-focused, what Long Island Iced Tea Company, which is a beverage distributor, became long blockchain because that was the opportunity that was rewarded, albeit briefly, in the market at that time. And this time around, we are now talking about the price of all these coins. And I think the most important thing, and this is something that it's the way that I think about Bitcoin, is that the price creates the necessity for the asset. The price at 46,000 per coin is unignorable as a meaningful part of the financial system, as a meaningful part of the asset allocation equation for a lot of different entities, be they corporates, be they investment managers, be they high net worth individuals. And so at 17,000 even, 20,000, you can make a case to ignore Bitcoin, not have to worry about it too much. At 46, certainly a lot harder. And the case is going to get harder still, right? Bitcoin at 60,000, 80,000, 200,000, price points that I'm sure Bitcoin will hit in the not too distant future. Those are unignorable. It gets more difficult to say, here's why we don't have a Bitcoin position. And also, Julie, to your point about, bears and predictions of crashes and so on and so forth, guys, I don't feel like the bears have really updated their theses at all, which makes it quite uninteresting to hear about. There's no intrinsic value. It's not going to be you're not going to buy coffee at Bitcoin. Does anyone think that moves the needle? Has anyone not heard that before? Does anyone care that is perhaps maybe it might not even be a weakness, but it is a case for a weakness in Bitcoin? I mean, I think that's another part of this as well. It's been 3 years, and the skeptical views, the mainstream skeptical views that you're going to hear from, a traditional money management firm, many of whom, again, have given those up, but those that have skeptical views, they haven't really changed them that much. And I think that's another part of this story, Sozzi, that it hasn't evolved all that much. The only thing that's happened is Bitcoin goes up a lot. And, as I just outlined, I think that matters more than anything else.
An important point, Myles, because now the story is going to have to continue to evolve to support the run we have seen in the past day and a half, 2 days, or even the past couple months. And by evolve, now you're going to have to see a lot of corporations come up here and either make a decision. Either they go down the route of what Elon Musk came out with yesterday and say, we're buying $1.5 billion of Bitcoin, or we're not. I think that's what you're seeing, what you've seen in the market, at least this morning here, this expectation that now suddenly you're going to have corporate America go to investment banks in coming weeks. That's what they do after they report earnings and say, hey, you know what? We are sitting on a ton of cash, billions of dollars. We're going to go put I'm going to play a little bit around with it. We're going to go out and buy some Bitcoin. And I think that expectation is why prices are up today. But, I've talked to a couple of execs since Elon Musk came out with this news. This is still not even in their radar. There's a lot of hurdles for a CEO to come out here or a company to come out with a press release like Musk came out with saying, or in their financial documents in the SEC saying, we're going to be buying $1 billion of Bitcoin. I just don't think it's going to happen over the next couple of weeks, which maybe perhaps lead to a little pullback. Unclear.
Well, and why would they really? I mean, I think Elon Musk is a unique case here, and the handful of other CEOs who are sort of Bitcoin acolytes, devotees, whatever you want to call it, since there is sort of a religious tinge to all of this, and to Musk, the cult of Musk himself. Do companies go out and buy stocks in bulk and reveal those holdings on a regular basis? I mean, this is not something that is very typical. So I would, I think I saw a headline this morning that said that Tesla's Bitcoin investment is a nightmare for the bean counters, which is something that you sort of expressed yesterday, Brian, when you talked about that, holding this kind of position from a traditional financial perspective for a corporation is a difficult thing to do. And it's tough for me to see, to your point, other companies coming out and staking this kind of position when, Musk is sort of a maverick in many ways.
Though I don't think that you necessarily have to go out and buy Bitcoin with your additional cash on the balance sheet. But I do think there is another dynamic here. This gets way away from crypto, which is just that as the largest companies in the economy get ever larger, and every quarter, right, everyone makes the joke about all the things Apple could buy with all the cash on their balance sheet. There needs to be something to, I should say this, corporate treasury departments are going to be thinking differently about that additional capital on their balance sheet outside of the traditional, well, we could buy back stock, we could issue a dividend, we could buy another company, right? I think you look at, obviously it's different because of the insurance businesses and the float, and that's how Berkshire structures the investment portfolio. But I do think there's going to be more active management, let's say, of the capital that sits on corporate balance sheets. This may include Bitcoin, it may not, but this is probably going to change quicker than we think in the next 5 or 10 years, just in how companies think about themselves as independent allocators of capital. Lots of companies have independent VC arms, so on and so forth. I do think that cash management is not going to just be treasuries. I think there is going to be more aggressive use of that because there is so much of it sitting on corporate balance sheets.
Maybe. And we can save the debate for another time about whether that is a good thing or a bad thing for investors in those companies.